Hi fellow traders, here is EUR USD analysis in line with my previous analysis. I have said formation of three drive is under construction. So this is the first drive, second drive and third drive. And I have said that the retracements are very harmonic to each other in terms of length but not in terms of speed, and a slower upward retracement is more favorable to bears. If you look at this previous retracement, this was also from this to this point, this was like 80 pips, and this time also it is from this point to this point, it is around 85 pips. So very similar to each other, and they were actually ABCD retracement, ABCD retracement. ABCD retracements against the Mason move makes Gartley. This was also ABCD retracement. As expected, market came down and we exited our sell positions as per the plan, and now we again have the sell position. So let me first explain what happened on the daily time frame, and then I'll tell you what is the next plan. So if you remember the last analysis, which was very extensive analysis including weekly time frame as well as daily time frame. So there was a evening star on weekly, and there was a bearish Gartley on weekly time frame, and there was a tendency to continue downside whenever market breaks the channel to the upside and makes such kind of pattern. So last time I had given example of this similar kind of pattern, looking like head and shoulder. Market had reacted from the neckline, again went up but broken down, and before this it was in kind of channel. If we join this line, all right, so this was the previous setup. All right, okay, so market had broken above this trend line, channel line, and had made something like this. Similar kind of story was expected because this movement was also in some kind of channel. See, I will just make it a little further like this. So this was the tendency of euro, and it is in already a downtrend for a very long time. So similar kind of behavior is expected, but there was a chance that market will react from this trend line. That's why I suggested to exit half of the position around here and then half of the position at the completion point of the three drive. So what happened when 1 hour time frame gave us the signal to exit? First we exited after this reaction. Price came to as low as 10.91.3 and then reacted and made this hammer, bullish hammer on 1 hour candle, and this was made during London session, first I think first 2 hours. This was the I think first hour or second hour, I don't exactly remember, but this candle was important. So we exited partially here, and then we waited for further reaction. Further market went down, but there was very slow movement to the downside, and again made similar kind of hammer, and we exited around 10.89 all the positions. So now we do not have any sell position, but today market came up after release of positive data, and that is German ZEW indicator. So that again came very positive, and market reacted to the upside, and we got our minimum retracement when we entered the sell position. So minimum retracement is 30% of the recent move. So if I draw Fibonacci here, then this is the 30%, which was around 11.054. Since movement to the upside was very fast, so we were looking for slowing down in the price first before entering the sell position, to understand that the positive news has completely been priced in, and now is the time to enter sell. So we were on 5-minute time frame, and that's why we got the opportunity to enter at 11.07, because we had not placed any sell limit. Rather we entered manually after looking that the okay fine, price has already priced in, now the effect of news has faded, and now let's continue to the downtrend. So 11.07 is where we entered. So that's it about the entry, and now we will be placing our stop loss something beyond this level, because after moving to the downside caused by positive US retail sell, this was the first retracement to the upside, and then market had fallen. So this was the top of the first retracement. Market should not take out this level. This level is 1142. Market should not take 1142 if it is really intending to continue to the downside. So our risk from this point to our entry, that is at 1107, is around 35.5 pips, whereas our reward is better than this. I will explain the reward on 4-hour time frame. So let's remove these tools and let me go to a 4-hour time frame. And this is the Gartley which I was talking about, that the last time market had made A, B, C, D, which takes a shape of Gartley. Again market made A, B, C, D retracement, which is again something around 80-85 pips, and this also took the shape of the bearish Gartley. So that's all about this previous analysis recap. And now let's move to calculation of the target. So you got the entry point, you got the stop loss point, and now is the time for calculation of our target. So minimum mathematical criteria for completion of a 3 drive is every drive should be 127.2% extension of its first drive. Its previous retracement. So if we look at this second drive was already more extended, and it was more than 127.2% of this upward retracement. But it's not necessary that the last drive is will also be similar, and last drive will also be obviously will also be as lengthier as long as this drive. Minimum is just 127.2. So let's measure 127.2% extension to the downside of this drive. So I'll make it visible only on 4-hour time frame, and here I will plot only one level, that is 1.272, this one. All right, so this will be our target, 1061. 1061 is very important area. 1061 is also coinciding with the previous low. Previous low is something around 1067, and this is 1061. So there is only 6 pips difference. So you can keep your target something between 1061 and 1067, or maybe you can exit half at 1067 and rest half at 1061. So this is our reward. And now let's calculate how much is there on the table on the reward side. So from 1107 to the target. So from here and target, if we simply exit all the position even here, then we have 41 pips on the reward side. So this is slightly better than 1:1 risk reward, and you can take the position. Market price is now 1104. Maybe you will get the same price as I got, 1107. So that's all, and thank you for watching. If we go back on daily time frame, there is only one contradiction which people will be talking about, that this market is still trading around this trend line, and now it is above this trend line. Maybe some further upward continuation can happen, but I had already shown you the nature of this pair in the past, that what had happened last time at the similar kind of situation. See, similar kind of situation, market had gone up but had come down. So it's not necessary that market will again go up to the previous top just like last time. That people will be expecting that it should go here before coming down or before finalizing further trend. It's not necessary, because we are consistently getting positive data from the US, and there are few upcoming news about some economic data from the US in this week, which will further push the euro to the downside, and I expect that those data will also be either in line with the forecast or maybe slightly better. So just a trend line alone cannot contradict and cannot cause much trouble for our pairs. So that's all for USD. Thank you for watching. And if we technically look at this trend line, this trend line has been broken. If I precisely draw this line, then we should put this at this first support, okay, and let's put it precisely as per the magnet mode, and then let's right click it and extend this to the right side. So this exactly is the trend line. If we can connect even with this point, still we can see that the price had yesterday closed below. Yesterday whole candle was made below. I think this was the Monday's candle, and Friday closing was also done below this. If I look at my broker, whose closing actually happens at the 5 p.m. New York time, so that closing price is really correct and accurate for calculation of the daily closing, opening, daily high and low. So even if I take my broker's closing price in account, I have seen that the trend line to the downside has been already broken. So I don't believe there will be much contradiction, but yeah, there is slight contradiction. Prices is still trading around here, the trend line. But if you look at any kind of trading setup, there will always be some factors which will be contradicting with your idea, but you will still have to take position on majority of the factors which are supporting your idea. Majority of the factors are supporting sell. That's all. Thank you for watching.